Good morning and welcome everyone to Money Control live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Well, Indian equity markets are set to consolidate in today's trading session. They lack positive trigger in absence of any major cues in today's session, but FOMC meet will be eyed. December 13 is the date when this is likely to take place, and in absence of this, further direction will be provided upon once the meet outcome is there. GIFT Nifty indicates some consolidation around that 21,000 mark for Nifty at this point of time. And talk about the US market and the global cues that we have. Well, a little bit of mixed cues coming in. US market at least, S&P 500 notched in newer highs for 2023 on Friday. They clocked in 6-week hot streak after solid economic data. November jobs report and University of Michigan consumer survey data signaled in a resilient economy and cooling in inflation, fueling hopes for a so-called soft landing scenario. Talk about the job reports data. It continued to portray an economy that isn't on the brink of recession. Asian market, get on to a cautious start pre-central bank meetings and US inflation data. Talk about FII. They've bought shares to an extent of 3,632 crore and DIIs have sold in worth around 434 odd crore. Well, in terms of what we have for the F&O cues, that also is something that we need to watch out for. FIIs, they've been the net buyers across the segment, barring Bank Nifty options. For index futures, they've been buyers for index option, stock futures, Bank Nifty futures. The only place where they've emerged sellers is Bank Nifty option. That's the one that you need to watch out for. Of course, there has been a sharp run-up that we've seen, at least when it comes to the banks, both PSU as well as private sector banks, but private sector banks' participation is rather encouraging. Talk about F&O ban. What is new in the ban is Hindustan Copper. What still remains in the ban is Balrampur Chini, National Aluminium Company, Delta Corp, India Bull Housing Finance, Z Limited and SAIL. What comes out of the ban is India Cement. Talk about Nifty PCR, about that 1 ratio, but is now dropped to 1.20 versus 1.34. To remember the fact that a ratio above 1 indicates more puts as compared to that of calls. But let's get going with the strategies level and top recommendation of the day with Prashant Sawant, the founder of Catalyst Wealth. Morning there, Prashant. Book profits at Nifty at 21,000 level or wait for further dips to come in and then consolidate your position? What's your word coming in?
Yeah, good morning, Nikki, and good morning to all the viewers. So if we currently look at Nifty Futures, we are quoting somewhere around 21,050, 21,075. 21,100, 150 happens to be a major hurdle. So typically what one should do is you need to trail closely now, and your trailing stop losses in futures have to be somewhere around approximately 20,950, 20,970 odd levels, say 100 points from the current level. So that in case there is a reversal, you are booking your profits almost near to the top. That would be a good strategy. I think the overall texture is very strong, and any further dip to levels around 20,800, 850 can be a good opportunity for the next leg of up move. So I think from the current levels, I'll wait for Nifty to consolidate, give a dip, and look out for a long entry. One word of caution: do not short this market at all. There's a very strong inherent strength, and I would not be comfortable shorting it and leaving an overnight short position, because any gap up can completely affect your position immediately right at the open. So do not short Nifty. As far as Bank Nifty is concerned, I think currently we just managed to close somewhere around 47,500, which last week we spoke about was a major level in futures. And if we continue to trade above this crucial level, say around 47,550, 600, then we can easily show levels around 48,000. Currently, one should trail the position with stop losses around 47,000, 47,200, which was a previous resistance, so it may act as a support now. Overall, both the indices are strong, but a dip in both would be a good opportunity to go long.
All right, that's the advice coming in. Don't short this market. It is completely going against the trend. We've seen the best winning streak, at least for the in the last 3 years. That's since 2020. Now Nifty clocked in the best weekly gains at least for 6 consecutive weeks. The last we saw that rally of 7 consecutive weeks was in 2020. Don't short the markets, Perhaps wait for the dips and then initiate your position. That's the word coming in from Prashant. Well, Nifty 50, a bit of consolidation like we expected. Flat start coming in for the markets. But the good part is it stays around that 20,900 mark, 20,950 mark rather. It is a good start, right? Let's just say a flat start with positive bias, 0.1% of gains coming in early morning, but a bit of consolidation trend essentially, which is playing out for the markets. No surprises there. Talk about Bank Nifty just to see where the momentum has been stacking up. Well, Bank Nifty also is the one that you need to watch out for, right? We've seen significant amount of momentum coming on this one. And in today's session, a bit of strength actually is lent in from Bank Nifty. I'd not be surprised to see HDFC, ICICI Bank and all the other banking companies doing rather well in trade today. Nifty Bank right now is in good shape. Talk about mid-cap and the small-cap index just to see the level of outperformance, if any, coming in from the broader counterparts. Well, mid-cap is showing some resilience there, 0.2% of gains coming in for the mid-cap index and the small-cap as well. Let's look at that just to see where the momentum is. Well, a bit of outperformance clearly. Like to watch out for IT, Nifty IT basket, because that's the one where it's not really typically, participated into the rally in a big way, right? 0.3% of gains coming in this one. It's a good start for Nifty IT index overall. Talk about something in the like of Nifty PSU banks, because PSU banks, do bear in mind the fact they've been an outperformer through and through. Valuations still remain at a discount as compared to the historical averages. PSU bank also in good shape, clocking gains to an extent of 0.8% in early deals. Talk about Nifty metal index. Well, that's also has been shining bright this far. And in today's session, well, a bit of flat start with positive bias coming in for the metal basket. Talk about Nifty real estate index. That's the one that Morgan Stanley apparently has come up with a report on the space and downgraded Oberoi Realty. That's the one that we'll talk about in just a bit. But 0.5, almost 0.5% of gains coming in for Nifty Realty Index right now. Talk about the top gainers and the top losers. And no surprise for guessing, we have until now seen Adani Ports doing extremely well in trade today. And this time around, within this week, it's no different. Adani Enterprises, Adani Ports, HCL Technology. Well, IT has finally started participating. IndusInd Bank, Coal India and BPCL. These are some of the top gainers that you have right now. Talk about the top losers. Well, just to see where the market breadth essentially is in the favor of advances, DRL, Asian Paints and Cipla. These are some of the top losers that we have. Sun Pharmaceuticals, M&M and Maruti Suzuki. So pharma companies right now are not doing too well. But let's go back to Prashant and check with him what does he make out of something like maybe Adani Ports right now and Adani, a group of companies, a strong run at this point of time. This week is no different for these companies within the basket. What do you like and what should one also be cautious of within group companies?
So, Nikki, if we talk about Adani Ports, I think it has moved very strongly last week and one needs to trail closely now. I would not recommend fresh buying at the current levels. So, we are quoting around 1020, 1025. One needs to trail with the stop loss at 1000 or say 995 and hold the positions. Overall, I think it has tried to move to levels around 1045, 1050. But as I said, the wise decision would be to trail existing longs with the stop loss at 1000 and wait for a dip. Do not enter at current levels. Too stretched at the current level.
All right, I'd also want to understand IT stocks have finally started showing some amount of momentum, at least in today's trade. Tired of knowing where is the bottom of these stocks. For you, for TCS and Infosys likes of that, what do you like and what is the immediate support and resistance level for this one?
So I think in this space, after a long time, the leaders are looking good. So TCS is looking good. It is quoting around 3,640. One can enter with stop losses around 3,590 and look out for swings up to 3,720, 750 odd levels. So and overall, if I look at the mid cap space, so one stock which has done phenomenally well is Birla Soft, BSoft. Currently, it is a little stretch, but a dip to this stock around 655, 650 odd levels can be a great level to enter again. It has shown strong strength and it has been very strong for the past 3 months. So I think any dip on Birla Soft would be a great opportunity. And if I were to compare, to choose between the frontliners and mid cap, I would surely go with Birla Soft.
All right, so a bit of change in trend there. Birla Soft is the one that we're looking at. RIL, what's the immediate support and resistance for that one?
So Reliance, I think, after a long time has managed to give a strong move. It has sustained above the crucial level of 2400 for almost a week. Currently, I would say that it is quoting around 2460. One can enter here as well. Stop losses should be kept around 2435, 2435. It would be almost a 1% risk. And you can look at targets around 2500 as the first level and 2520, 2530 as the next levels. Overall, the stock looks strong and one can surely go long from this level as well.
All right, Prashant, stay on with us. We're quickly going to address in stocks and news that needs to be on your list today and includes the like of something like Tata Motors to begin with. The company is going to be increasing in the price of commercial vehicle with effect Jan 2024 by 3%. Price increases to offset the residual impact of past input cost, which is going to be applicable across the entire range of commercial vehicle segments. Right now, the stock is up in trade with gains of around roughly 0.7% thereabout. Zomato, that's another one where the venture capital fund owned by Japan's Softbank, SVF Growth, has exited the counter. It's selling in remaining 9.35 crore of the equity via an open market transaction, and the shares sold at an average price of roughly 120 per share for a value of around 1,127 odd crore. Well, not too much of an impact for this one, but the stock right now is trading flat with negative bias. GMR Airports, well, that's an interesting one, where there is, GQG essentially entering into the company along with few other Goldman Sachs and picking up 4% stake in the company. Now, AERA has also revised in the aeronautical charges for Manohar International Airport, Goa, and the charges cover UDF, landing parking. UDF is nothing but user development fee, which is also slated to be hiked between the year 2024 to 2028. GQG, along with Goldman Sachs, now do bear in mind the fact, and the affiliated funds have picked up close to 4.7% on this one, and the entire basket right now, let's just say the stock is doing well with gains to an extent of 2 odd percent. Nomura has also picked up 1% or so within the counter. You also have select foreign investors opting out of the GMR names, and that includes the like of AD Investor Fund, ASN Investments, and others in that matter. Talk about 5-star business. Well, that's the one which perhaps is newly entered listed entity too. The foreign promoter matrix has essentially sold in 3.16% of the stake in the company, and at an average price of 730 per share, and TPG2 has sold in at an average price of around 730 per share. Now, that's a bit of development coming in for 5-star business. The stock seems to be doing well and is actually up with gains of more than 0.75%. Buying side apparently looks like have interesting names there around. That is why not much of reaction coming in from 5-star finance. Real estate basket, that's the one clearly that deserves a mention today. Morgan Stanley has come up with a report on this one. It's spoken about the demand environment now supported by strong macro and positive industry structure, lower leverage, and industry consolidation, which has measured price to provide a multi-year upcycle. That's a pretty bullish report coming in for the real estate. It talks about meaningful downside exists as well as the industry upcycle, which has started since 2021 in terms of ASP, average selling price growth. Now, it is expected to continue with the help of strong macro and favorable industry structures. But one place where it's gone ahead and downgraded the counter is Oberoi Realty, where it's downgraded the counter to underweight and has raised the target price to 1,180 from 885. DLS is an overweight, target price has been revised. Prestige is also an overweight, target price has been raised to 1,300 from 524 earlier. Well, Godrej Property, also the rating has been maintained and the target price has been replaced in higher. Prashant, coming on real estate stocks, do you like anything within that space? Oberoi Realty saw a bit of downtrend coming in on account of Morgan Stanley's stance on that counter, but overall within the space, what do you like?
So I think, Nikki, my favorite in this entire space has been DLF. It has definitely outperformed the sector and even at current level, it looks good to me. Currently quoting around 665, 666. I think one can enter with stop losses around 655 and look for targets around 685, 690. The pattern and the volumes have been extremely strong for this particular counter. And I think in the reality space, DLF might outperform the entire sector in the coming 15-20 days on.
All right, Prashant, we're just going to leave it at that. Thank you so much for taking out the time and having this conversation with us. All right, let's bring in the fundamental side of the story and the fundamental guest that we have on this show. Anirudh Garg, who is the partner and head of research at Investec PMS. If I've got the name right there. But Anirudh, I'm going to start off with your assessment, about FII comeback in a big way in the run-up to election. 6 months in the run-up of election, usually the trend has been that out of 4 elections that we've seen, general elections, FIIs have been the net buyers. Do you think the scenario will not be different this time around too? We will see that buying coming in, and by virtue of that, you will see banks doing extremely well. What's your assessment?
Okay, a very good morning, Nikki. Thank you for having me. Yes, you're absolutely right, Nikki, when you say that this is the time for FIIs to come in. We also believe that it has been the history. And apart from just the elections, that we believe that FIIs were laggards in terms of investing into the Indian markets, which have performed very, very well. FIIs are net buyers of quality in our terms. This is an old economy run which is focusing on value, which the FIIs tend to avoid a bit until they understand the full story. For us, I think with the government winning in the Hindi heartland and now a clear trend about 2024 emerging, FIIs have now got a surety that, okay, India is the right place to invest with the, I would say, a government which would be there for the 5 years, assuming that 2024 follows the trend, which we do believe that it will follow. And FIIs are betting bullish on it. Now, all those wonderful government companies or wonderful old economy stocks are also joining in terms of, say, like a PFC, REC, a lot of sovereign interest, a lot of FII interest we are seeing is coming in. And yes, all those banking stocks, as you mentioned, something like an HDFC Bank, something like a State Bank of India, which have been FII's favorite, something like Kotak Mahindra Bank. Yes, a lot of traction we believe that we would see in the coming 6 to 9 months in these stocks.
I also believe that you have a pretty bullish stance coming in on the PSU stocks, Hindustan Aeronautics to be in specific. Talk about that theme specifically, drawing parallels within the space if we can. PSU banking index thus far, if you talk about that, has been an outperformer so far, both for Nifty as well as Bank Nifty. But how about the other PSUs in that case?
Okay, see, markets, they have a tendency to pick up something from a very, something which is too much beaten down and then make it rise so much that it becomes exuberant. This has been a general trend in the stock markets for years now. The PSU market as such, the PSU stocks as such were very, very degraded, that to a level that a lot of I would say veteran fund investors came to a point where they said that owning PSU is a crime. We will never own PSUs in our portfolio. See, PSUs are very, very essential for the Indian economy. They are very, very good companies. Yeah, there was a management concern, which is not totally elevated to private levels now. But yes, PSUs are seeing a lot of autonomy and a lot of revamp by the government. The Modi government is very, very clear on that. And that is why PSUs are the value. There is still, the run is searching for value, and still there is so much value in the PSUs. You have something like a HPCL, BPCL, IOC operating at 3 price to earnings. Yeah. So PSUs are very, very cheap. They have a lot of value. And this run, when it makes the PSUs exuberant, would unearth a lot of value in the PSUs, and there is still, we believe, a long way to go for the PSUs in the next 2 years. All these PSUs, whether it be PFC, REC, whether it be OMCs, whether it be anything which is domestic oriented, the only clear trend, Nikki, is that, okay, Firstly, it was capex. Clear that India, anything that was related to capex, whether it is railways, defense, is going good. Then it was anything which is related to Indian economy, even the interest rate sensitive, as you were talking about real estate, these would do good, autos would do good. Now it comes, the only problem that is left in the market, which we believe would be elevated, would be done away in the next 3 months, is the international consumption that is down. So all those metals, these companies which are affected by international prices are the ones that will be laggard, be it in private, be it in PSUs. Otherwise, PSUs have much more value to be unearthed than their private counterparts.
Well, point well taken, but just to play devil's advocate, you also made a point where you say in this markets, usually you will see those stocks rising at some point are really higher, where they've been beat, which has been the worst hit of the lot. But that doesn't seems to be playing out for IT stocks, right? We're still trying to find the bottom of those stocks, something in the like of Infosys, something in the like of TCS. Quarter after quarter, we're looking at some signs of recovery, which clearly is not at to be seen anywhere near the surface. How are you approaching this sector? And, within the sector, what do you like?
Okay. So IT, Nikki, IT is a very interesting case. Let's take it on a very, very micro level. We knew people who were being placed at 6 lakh rupees in Bangalore, promoted to a salary of 36 lakh rupees in just a period of 1 year during COVID. IT went into mad hiring during COVID. And when you go into such mad hiring, when you believe the point is that when you go into such mad hirings, you believe that there is a lot of scope. You sometimes overestimate things than they what really are. This is what happened in IT. They overestimated what work from home is, and then when things set in, when COVID problem was gone, they realized that okay, the hiring that we have done is not right. So I think IT is going through that 3 to 4 year of time and price correction, in which all the bad decisions that were made during COVID are now to be set right. And ultimately, when this time and price correction is over, IT would again pick up. But owing to the old economy run, where there are better opportunities elsewhere, market is not rewarding them. Market rewards relative growth, and relative growth is currently not in favor of IT.
All right. So what really you think could be working in next for the market? You think it's something in the like of Ritik, where you have stocks like HDFC Bank, RIL, ICICI Bank, TCS, Infosys and Kotak Bank now performing with the influx of FII probably that will come up in the run-up to election. You think these are the stocks perhaps which could be seen more from a light of preferred bets within the large cap space?
That's a wonderful name that market has given them. Yes, we believe that these Ritik stocks that are there, which are the backbone of Indian economy, would now not underperform. The time correction that they had to go through is now almost over. Something like a Kotak Bank coming from a 6.5 price to book to a now a 3 price to book. I think the time correction is over, and now they will perform with the markets. But yes, still the primary trend is in favor of value. When we talk about value is most in the small caps, then in the mid caps, and then in the large caps. And then among mid, small and large caps, value is more in the sectors that are there, something like capex, something like domestic consumption. So when you come to capex, it'll be railways, defense. When it comes to domestic consumption, it'll be autos, it'll be real estate. So yeah, all these old school boys would perform better. But yes, as you asked, the Ritik stocks, we believe that the time correction is over and that they would not underperform the broader index as such.
Right. Anirudh, last question that I have for you in that case is 7 IPOs will be hitting the primary markets. Out of that, 3 will be mainboard and 4 will be SME. Now, just talking and focusing about the mainboard IPOs, you have something in the like of DOMS Industries, which is a stationery manufacturer. You have India Shelter Finance, and the third is Inox India, which seems also to be an interesting one. Within the 3, what you're closely eyeing and perhaps giving a suggestion for the investment?
Okay, so Nikki, I'm not a big fan of IPOs. I believe that the primary market in India is so huge, where the secondary market in India is so huge where there are a lot of opportunities in terms of stocks that are actively traded. The main problem with IPOs is that you do not get the required subscription that you want. Yeah, when it comes for our investors, I'm more bullish on Inox.
All right, so Inox is one, but with Nifty now consolidating around that 21,000 mark and perhaps traders now racing for the final Fed meeting of 2023 in the week ahead, what are going to be the possible triggers here on that you think you'd like to watch out for and the next big level for the market?
Okay, so I was discussing this yesterday. We believe that markets generally feeds on bad news. The only problem with market right now is short-term, very, very short-term exuberance that is happening in the market due to the BJP win. Everybody is in a very good mood and everybody's, I believe, a little bit overestimating the short-term direction of the market. This rise that happened post-election result has resulted in a little bit of euphoria. But, markets have a tendency to prove me wrong in terms that if the market is on a bullish side and the 5 year trajectory is clear, they may continue. The medium-term trend has no problem. The medium-term trend is very, very bullish for India. But yeah, we believe that in the short term, there can be a little bit of problem, a little bit of profit booking can come. But any dips that are there should be used for buying. Secondly, you were asking about the Fed. I think it will be a non-event. The Fed is a non-event now. The inflation is coming down. Yeah. Predicting a rate cut in the first quarter, I think it's little too much, but the rate cut is coming. It is not very far. The inflation problem, I think, is behind us.
Right, that's the word coming in, inflation problem now behind us, but we're just going to leave it at that. Anirudhan, thank you so much for taking out the time to have this conversation.
Thank you, Nikki.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Money Control app.